Hello everyone, sorry for the delay. It's been a while since I posted the last video. So today I want to talk about dividend versus growth stocks. Again, these are very important themes that we encounter while investing. We want to know what's the difference between getting a dividend and what's the difference between investing in a growth stock? What are the trade-offs involved? And why do we choose a particular form of investment or a particular methodology of investment, and why we don't choose the other one? All right, let's get into it. Like, what are some of the pros and cons? So, dividend stocks, like, primarily you want fixed money over a time period. You want some cash flow. That's what you desire. You want like that income coming into your account. So, money is usually consistently received over a fixed time period. Companies and instruments can be expected to be mature. Now, that's not always going to be the case, and it need not necessarily be the case, but they're expected to be mature because they're paying out that money like over, like, let's say a month, a quarter, or a year. So they have to have that money coming in, and from the profits they're giving you that money back, like a company or an instrument, whether it's property, whether it's a stock, whether it may be any other alternative form of investment. So in dividend stocks also, you can expect capital growth is not usually going to be that high. And the reason I say this, like, you could have a high growth situation, but mostly like you might be looking at steady state, because if a company is steadily paying out dividends, think of it, they're giving returns to their shareholders. They're not in that kind of position to grow that aggressively because they're giving the money back rather than reinvesting it in the company. So it's very important to understand this when it comes to dividend versus growth. Also, one important thing about dividend stocks is you expect higher taxes to be incurred, because when you're receiving income, that income is going to be taxed. And also, when a company is paying out part of its earnings, they're not reinvesting it, so the compounding effect isn't as wide seen as is seen with growth stocks. So it's very important to know this, understand this, and realize this. Now, when we come to growth stocks, money is usually reinvested in the company. So, like, we're talking about, you'll have a lower tax situation, obviously, but you're expecting the business to keep growing and making more and more money for you. Like, think of what venture capitalists do and what business owners do. They take the business from a very small nascent stage to a large company, and then they exit from the business. So they're looking at a very high growth situation. So that's important to understand. When you're investing in these growth stocks, you're trying to be more aggressive. You're looking for that growth. You're not trying to be conservative here. So make sure you allocate capital accordingly and you take those measured risks accordingly. Okay. Also, companies or instruments, they're more in their infancy and they're striving towards maturity. They might not necessarily be mature. They might be smaller and mid caps. So it's important to realize, like, what are the differences between growth and dividend, so that you have the mindset to be able to invest and the expectation aligns accordingly. So that's really important. Capital growth is usually expected to be a lot higher. Like, you're investing in a growth stock, you want that small cap to become a multi-large cap. It's like investing in Apple in like the 70s or 80s, like whenever the company was, people hadn't heard of it, but it had like a lot of potential. You see that with a lot of different kinds of stocks. So that's sort of the mindset. Even like Nvidia, you look at last 10 years, like, just insane growth. Okay, so that's the kind of outcome you hope for. Obviously, that's not in your control, but you do the due diligence and allocate capital accordingly. Also, you incur lower taxes, so you expect higher capital gain, and when you sell it, then that's the time you pay taxes. So you pay taxes at the time of selling, so you expect lower taxes, but you expect a lot higher volatility, because these stocks don't go, in a straight line or in a plateaued effect. They are very volatile. They keep going up and down. They keep swinging wildly. So it's important to have that mindset, because when you invest, you don't want to take irrational decisions and you don't want to be under panic or stress. You want to make rational, level-headed decisions. So that's very important. So I hope I've demystified some of the common factors between dividend and growth stocks and some of the things that you need to look out for. So as far as the expectations go, dividend investor, steady cash flow, income mindset, probably a little more conservative with capital. The growth investor, cash flow isn't as much of a concern. They're looking for that hockey stick J-curve sort of return from the stock. They're looking for a very high appreciation. So they have an appreciation mindset. The mindset is, I want that high growth and I'm ready to take the risk for it. So it's very important to define those expectations when you're investing, because then you can hold the position, you don't cash out early, and you ride out the whole cycle of growth. That's very, very important for any astute investor. And you're relatively more aggressive, like you want that capital appreciation. You're not looking as much to preserve. You're like, it's okay if this position goes south, I'm okay with it, because for every Nvidia you will have, like, like a Satyam or a Brightcom group or anything like that. There are going to be those situations. Again, this is not like investment advice, so please do your research and figure out things accordingly. This is just, I'm trying to demystify the various approaches. So the key takeaways in investing involves personal preferences. Invest as per your risk appetite, and set goals and invest accordingly. Because once you have the goal, what do I expect? What is the outcome? It makes it so much easier to actually take that call and invest and allocate. Again, these are just like some of the key takeaways. I would definitely like to know, like, how you, my subscribers, or whoever's watching this video, makes their investment into either growth or dividend stocks or any other kind of instruments that you would. And I would like to hear it in the comments. And accordingly, if there's something missing or there's more kind of content you look forward to and I can cover it, do mention it, because that will help me create a lot more of these videos that are informative and help create a lot of financial literacy and better investors. That's what I'm hoping to get out of it. Thank you, and I'll see you in the next video.